welcome to another episode of the Hive Mind podcast. Today, with me, as always, we have Jan Lieberman, Managing Director at Delphi Ventures, Ceteris Paribus, Head of Research. I gave you your full name today, and Flood Capital, also known as Duncan, who is our altcoin gem hunter, coming at us from his Michael Saylor inspired office. So we have a bunch to get through today. Maybe to start with just markets. I believe it appears as of today that we're back, but maybe you guys have some more in-depth takes on this.
I mean, we're in the banana zone, right?
Think how hard Banana Gun's gonna pump when we enter in the banana zone. It's like a perfect lineup. We need to get Raul into Banana Gun.
But no, I mean, we're at 66 now. What softer inflation print? There's that SAB 121 vote that's like going on right now, which I think is pretty critical. It's basically like it's the things that who can custody the assets. And it was something put through by like the SEC. And like this is the thing that Biden said that if it got to him, he would veto it. So it's pretty important because it like changes market structure on like allowing banks to actually custody these assets for their clients. So that's like something big that will impact the market like today. And then, oh no, the ETH decision is next week, right? And
there's a 13 F season on before leaving Bitcoin side.
Yeah.
All the kind of announcements of Millennium,
yeah, pretty big position.
But yeah, you just find out, where did all these flows come from in Q1, and so now you kind of get exposure to random pensions and funds that put positions in, and it offers signal to the market that there's appetite across these funds and a lot more demand that can still come from those buckets, which is kind of really what's needed to put in a floor and move us higher.
Yeah, and I guess like the flows, like first they come from the hedge funds, kind of more nimble capital, and then hopefully you start to get the next level of flows for like different personal investment accounts, maybe like pensions, take a small position slowly. Yeah, I think things are
well, Wisconsin bought. It was a decent chunk, wasn't it? Like 100 mil.
Like 100 mil, yeah.
Well,
Millennium was 2 Bs.
But Millennium is like trading it, right?
Yeah,
which is still good, but
it is signal though, right? In the sense, because like the counter would be, oh, they've already bought. That's not as bullish, but this is we're still in the very early innings of players like them buying, and so I still see it as more signal rather than for upside rather than being quote unquote late.
Yeah, and crypto Twitter seems pretty bearish. Maybe it's just my feed.
No, because Bitcoin's down 15%, and then but all your altcoins are down 60%. So it's like literally, if you're going based on like crypto Twitter sentiment, you'd think we're at like 50K right now, just because everyone is all in alts, especially like a lot of people are in on memes. And like some like WIP has held up pretty well. I think it's at like 280 or something. The top was like 450. It's like, but like some stuff like whatever, the one Bowden was down like 80%. I think it's had a decent bounce, but like a lot of these alts, especially and like the low float high FTV ones got crushed. Like a lot of them are down like 60+% from the highs. So it's like pretty big dispersion versus Bitcoin being down.
That's the big one, yeah. The dispersion, exactly. Yeah, that makes it so different where people are so many, like, yes, prices are up, but so many people are still in a decent amount of pain and below their high water mark from a month or two ago.
Yeah. I put that little like chart out the other day that like 5 people took and tweeted it themselves. Like I broke it by sectors, and I mean, yeah, we've been talking about this dispersion the whole time. But when you really kind of just bucketize stuff, it's just really like anything Cosmos related modular related, like they're all down this year. And then you have a couple ones that have done well. Like ETH, everybody kind of like shits on ETH. It's not like ETH has been terrible, especially when you account for like all the LRT stuff, all the like the yield, like Pendle and things like that. It hasn't been terrible. What's been terrible is like ETH beta, and like Lido, for instance, is like down versus USD over the past year, which is pretty impressive considering where we were like a year ago, right? So I think that's like, yeah, there's like definitely a lot of pockets.
ETH isn't terrible against USD, but it's bucketed against BTC and Sol, right? They're kind of three on that stand alone, and it's just massively underperformed.
Yeah, I mean, definitely hasn't done well, but I think like the worst areas were basically just Cosmos and like ETH beta stuff.
Yeah. The other thing I see a lot on CT is this consensus that there are no catalysts coming and like no new flows, just like take summer off, come back in September.
Just hope.
And
That's just hope everyone's down.
In my view, like, yeah, exactly. Like whenever there's like a broad consensus like that, it's just so dangerous. Like Kang has that really good post, like how to avoid getting bear held, and the basic summary is just like you can't see all the flows, right? And like people in crypto, especially on crypto Twitter, just have this idea that they can see all the flows and all the catalysts and like time them perfectly, but in reality, you just have no idea what's happening with like 99.9% of this stuff, and that's why I think most people who do this short term trading stuff end up getting wrecked. Yeah, and whenever there's been so many times I feel like that there's been that consensus and crypto just like rips up off it.
I mean, also like think about these ETFs. BlackRock has been pitching this to like all their institutional clients and everything. They have a reputation to maintain. Like there's a lot of energy behind. Like you think they want to launch this and then have their clients take like an 80% haircut like in the first 6 months or something. And this is before a lot of like the banks have even been approved to like pitch it to their clients and stuff. Yeah. So I don't know. I feel like there's a lot that you can't see because this is a totally new market structure that none of us are ever used to, right? It's like totally new participants. And like, I just, it's like, that doesn't mean that BTC can't drop a lot, but there are these like new big participants that have like a vested interest now to like have it kind of.
I think the constant drip also changes that, before it felt like if BTC wasn't going up, it had to go down, right? Because it felt like you'd have these periodic inflows of demand, and then once those people allocated, you'd either have internal movement or it would kind of go down. Whereas now with the passive flows, I still think people are kind of convinced that if it's not going up, it kind of has to go down, but it's not necessarily the case. It can chill, especially with funding being this low. People can sit in longs for pretty long, and so and then you have these surprise flows, right? Like IBIT yesterday was 100, or it wasn't IBIT, it was ARKB out of nowhere with like a big inflow, and so that was something that was never present in previous market structures.
Yeah, I think that the ETF as a whole, like that whole machine behind it and the flows behind it is just kind of getting started. And that's what like this 13 Fs are showing us. It's like these more nimble hedge funds who can move really quickly are getting in. Like we haven't seen, the longer term allocators like start to dip their toe in, which like takes the marketing engine, takes like the churn to actually happen. So like saying that there's no catalyst, I think that like the ETF is still just like ramping. And the other thing is like we talked about this a lot in the previous podcast. So like I'm happy that we talked about it, just this low float that like just because Bitcoin's like goes up doesn't mean that like some of these altcoins are going to go up. Like the low float high FTV, like we've seen a lot of those names get absolutely crushed this month. And like, I don't know if those coins are going to make new highs, but I think, we're pretty constructive on Bitcoin, and then like selective alts that like don't have these big supply overhang dynamics and maybe have some sort of product. Hopefully, I think memes will probably do well, but I think crypto Twitter is definitely misleading because you could just see like everyone was allocated into memes and alts that just, Bitcoin was like down 20% after rallying 100, and people are like saying that they're down on the year.
There's
Right? Like,
also
it's crazy.
Yeah, like there's also a lot of survivorship bias in memes, right? Like
Yeah,
you
like,
don't really know what memes are like worth tracking until they go up a lot.
yeah, for
And
sure.
and so people don't talk about their 1,000 snipes of memes that all went to zero. And that's why like a lot of people are probably down, right? Because you're just like trying to snipe all these like new launch memes, right? There's like 10,000 new tokens coming out a day or something like that.
Yeah.
It's
And
like,
that was a big thing that we talked about
Fund
last
revenues
year
are
as
a good
well.
proxy for that.
Yeah.
It's just like, how do you size into some of those things like with conviction and actually hold them where, maybe the established ones you can now because they have some sort of mind share, but it's really difficult to, buy new, like you're literally just rolling the dice. And the higher those like, big ones go, like the more people want to get on the next one and the more going to be created and the more difficult it's going to get. So it's really difficult to like find like a new meme and get in early. It's pretty random, or you're just, god tier meme picker.
I mean, the way to look at, so, I brought up pumped off fund revenues, and I've seen a lot of people talking about this because of like how successful it is. But the other way to look about that is that's just all lost money from traders trying to like snipe these launches, right? Like that is just money. Like you can just look at it if that's how much lost, like the minimum amount that people have just like lost trying to
And also all
like,
the fees from
get it on memes early.
Telegram
Well,
bots.
it's also like it's a proxy for, so because there's like the meme investing kind of breaks down in different demographics, right? You have smaller PA sizes that are basically trying to snipe and sell within hours kind of thing, and do it in much smaller size because it makes sense for them, and there's definitely an edge there, right? But it can only really be captured by smaller PAs because it just doesn't, you can't really do it in size. And so like that's still continuously happening, which you reflected by pump revenues, right? Because that's solely focused on kind of launches. And then you have like the larger demographic, the I think the much larger position sizing where people are trying to catch the move from like 50 to 500 or something like that. And so yeah, it's a tricky one where, where's the highest EV, what's the highest EV way to allocate on the meme side? I think, like you mentioned, it's hard to size into a lot of these because so many tend to go to zero. And so it's almost, rather than trying to be counter trend and identify ones that you think can return, it's almost, you can sleep better at night, just picking winners with lower risk, lower return, and versus kind of, in the trenches trying to
And
do
what
the
else?
sniping.
And what
Sorry,
else?
what do you mean?
What else could you buy if you wanted to get meme exposure, but didn't want to pick a certain meme? I'm trying to get him to say banana. But yeah, so anyways, I just pulled up the dashboard. In the past 7 days, Trojan, Bonkbot, and Banana Gun combined have done around, let's round up a little, 600 million in volume. At a 1% fee, that's 6 million in fees they're taking out of the market. And then Pumped Up Fund, this article's from a week ago, but it said they did 3 million in fees last week. So we're talking about nearly $10 million just extracted from fees on those like three tools, or like, Bonkbot, Trojan, Banana Gun, and Pumped Up Fund on those four. So that's actually like a decent amount of money. And you just like see the like people just chasing, because you see WIF go up a gazillion percent, you see Bowden go up a gazillion percent. You makes you think that you can get in on the next one, which maybe you will if you get lucky, but really since like Setter said 10,000 new coins a day, it's going to be pretty difficult.
I mean, Pump made over $1 million in one day the other day.
Yeah.
It's like,
yeah, so it's pretty crazy. And these are relatively low volumes, right? Like you go back to March, instead of it being 10 million a week that these four are making, it's probably more like 30 or 40 million a week, which is pretty crazy.
Yeah, so it's obviously not sustainable, I guess, is what we're saying. But for now it lives on.
Yeah, well, it's just like, when do people get burned enough where they're gonna stop chasing the new memes, right? Because it seems pretty consensus that like memes are like these meme coins, and even with like the Rowan Kitty stuff, like it seems pretty consensus that that's what's going to perform. It's performed the best year to date, and that's going to continue to be one of the best performers. So it'll be interesting to see like how long.
I think it's consensus in like what people say, but my suspicion and seeing different polls on Twitter and stuff is that people still aren't really allocated accordingly. Like I think most people have probably sub 5 or sub 10% of their portfolio in memes, right? So I don't know. I think even if it is consensus,
Which is probably reasonable though.
Yeah,
absolutely. I mean, I'm there.
But it's also like you have I think what is going to keep them alive and is just the fact that every time we bounce, they bounce the hardest, right? And so it's hard to fight that, right? Or like if that trend continues, then you're going to see consistent allocation. The reason people really got burned in the drawdown is, yes, they had gains, but they just recycle those gains into the next thing. And it's, unless you actually take that cash out when there's a drawdown, even if you made gains in the previous thing and put them into the next thing, like you're going to experience that massive drawdown. And so it's, yeah.
And like, especially some of these on-chain ones, like the liquidity is so thin that, it happens really fast. It's like people start
and it thins out quick too.
Down 50%. Yeah.
Especially on Solana, because there's less liquidity. It's like Solana always boasts their like volume to TVL metrics, and there's a lot of like concentrated liquidity, but that's because the ranges are like tight, right? And there's also more like professional market makers kind of doing stuff there. And so, yeah, it can really drop out pretty quickly on some of those.
Yeah, the ratio of market cap to idle liquidity to volume is nuts, right? You have very little idle liquidity, a lot of volume, and a lot of market cap, and it's just like very high churn on that idle liquidity. But that doesn't mean you have a lot of exit liquidity at the same time. It's just like there's a lot of buying and selling happening, but the second a lot of the buying slows down, there's not that much exit liquidity for pure selling.
Yeah, no, exactly, because like you lose that side. There's no idle liquidity there to support it. I think another thing, like a meme coin, I actually think is, and it's not exactly a meme coin, but like one of the big things about meme coins, I feel like that gives them their value is like the distribution they have, right? The holder base, like the network effect. One of the analysts on the research team just put out a really good piece on like the attention economy, or attention is all you need, I think. But basically, it's all about just like eyeballs on the meme, and that's really how they kind of blow up. And so on Telegram, so Telegram has 800 million users, and they have like an exclusive deal with this like the Ton blockchain to have it implemented in the Telegram wallet, and basically they give you a free wallet as long as you don't have a US phone number. So they have like pretty crazy distribution, like probably like 700 million wallets created all on the Telegram blockchain. And like the biggest altcoin over there right now is like called Notcoin, which is kind of a meme, kind of like but like they're leaning more into the distribution angle, where they have, I think, like 2 million followers on Twitter. They have 6 million subscribers. It's like the third largest Telegram group ever. It just launched on like Binance, OKX, like all the big exchanges today. And they're kind of like, I guess, getting new projects who want distribution to like pay them money, and then they'll or buy Notcoin, and then like they'll distribute it like through their channels to people. So like that's just like one idea. I thought that's like the first meme coin that I thought was kind of interesting this cycle, because of just the sheer distribution it has, being the third largest Telegram group, having the most like 2 million Twitter followers, and being like really integrated into Telegram natively. And it's like not very big in North America. It's more of a rest of the world thing. I own some Notcoin because I thought it was cool, but it just launched today, and I think it's an interesting idea.
All right. I feel like we've juiced the meme coin and markets to the max. Does anyone else have some more stuff to say on that? Or we want to move
no,
on
I mean, the only thing on meme coin angle, I guess, is like, do we want to talk about how Degen Chain was out for 2 days?
I didn't even know that.
You didn't know that?
No.
Yeah, I still don't like totally understand everything what happened, but because like when you have a centralized sequencer, the benefit is that when you have an outage, like you can just start it yourself. There's no coordination needed, right? Like when Solana has their outages, they have to get 80% of the network to agree on like this fork and to run the new labs like release or whatever. And so it takes time, right? But Degen Chain was out for 2 days and there was like a 500K block reorg. So, which is like really bad. And this is like one of the risks of using, I guess, like there was 2 chains that were by one roll up as a service provider and like both of them went out. This is like just another like centralization risk, I guess. If like a lot of people start using one provider, whether it's like a roll up provider like RPC, I know Mert was talking about this. Like if a lot of people are just using one RPC provider and like that RPC provider goes up, there's a lot of hidden centralization pockets in a lot of this stuff. And so yeah, I don't know. It was pretty bad. Like I still haven't read like a full postmortem that I'm sure we'll get some point. I think a lot of people are just kind of confused as to how like single sequencer rollup was out for 2 days.
One last point on the meme front that we could maybe use to transition to another topic we want to chat through was Trump related activity, and basically how he came out as massively bullish. And so he's such a wild card, right? Like he's always gonna have an opinion on something, and so people were trying to get takes on him about just crypto and Bowden. It was, he obviously spoke bullishly on crypto, and so the PolyFi memes started doing well, like Trump in particular. But then when someone asked him directly about Bowden, he just started fudding it, and it actually started nuking, which is pretty funny. But I got to imagine that's going to be a continuing trend. Just getting his one-off takes because of how much he can move markets and how just blunt he'll be about certain things. But it seems like he is really going to both raise a decent amount of money and win over some voters, because I can't imagine a lot of people are going to be voting for him for his voting for Biden for his anti-crypto policy, but I think you'll definitely get some Trump voters for his pro-crypto policy. So it seems like a pretty EV positive bet to go that way.
Yeah, and then you had the drama, the sort of Blockworks drama on the piece that whoever that kind of journalist was that wrote, about not voting just because of crypto. That caused a lot of stir for a while. I don't really know why.
Like, I understand her point. I understand her point. Like, especially if you're...
What was the point?
I mean, especially if you're a woman, like there's a lot of like abortion topics that are important in this election, right? So, but the thing is, even if you don't identify as like single issue voter, I think when people vote, they normally have one thing in their mind, regardless about why they vote a certain way. And the thing that I guess would turn people off is that it was kind of trying to like morally shame people for like voting Trump because he's pro crypto. Whereas like I agree with the point that you should, I don't know, look at everything, but for a lot of people in this industry, this is their livelihood, right? And so
right.
I also think
because it's not even like the other side is trying to do it with good faith is the problem, right? It's one thing if one's pro and the other's kind of neutral, but here you have a scenario where one side is just irrationally trying to kill it, and so I think downplaying that was a bit disingenuous on her part.
Yeah, I also think like crypto for a lot of people, especially the people that got in early, maybe less of the sort of people from this cycle, is about freedom, right? And it is like a very like they got in because they care about freedom, and so they care about freedom, so they're going to prioritize that in their voting. And this kind of leads us a little bit towards these issues. Like we had 2 big kind of crypto legal rulings this week. One against the Tornado Cash dev, Alex Pertsev, and then one against the MEV-Boost exploiters, right? And I think obviously the MEV-Boost exploiters was just a was just like an action, whereas the Tornado Cash dev was an actual ruling. And I don't know how many of you guys followed this, but it was pretty terrible. I'd say like the worst ruling I've personally read for crypto, because the judges sort of like, it's not a case where the judges don't understand how all this stuff works and said some stupid stuff, made some stupid interpretations. They understand exactly how crypto works. They like acknowledge that, and this is a quote: "Due to the nature of how the system works, it is virtually impossible to make the user interface inaccessible. This fact, combined with the use of smart contracts, makes it virtually impossible to take Tornado Cash offline." So they acknowledge that this stuff is unstoppable, but they basically argue that the fact that the Tornado Cash devs built it and knew that it could potentially be used for criminal activity when they built it is enough to make them liable, which is pretty wild. So they say, yeah. In other words, the Tornado Cash founders are the inventors, creators, and implementers of Tornado Cash. As such, they're also responsible for the consequences of the operation of this tool. The autonomous, immutable, and unstoppable nature of the smart contracts does not work in this context as a desultory factor. After all, this is not a fortuitous circumstance. These properties are the result of conscious choices made by the designers. Tornado Cash works as was conceived. In the court's opinion, the defendant can therefore be classified as a perpetrator of the money laundering acts carried out by Tornado Cash. So, and interestingly, they also acknowledge, like in the court case, that they came up with a figure of 84% of Tornado Cash transactions are like normal people who just want privacy. The DOJ came up with a 93% figure, and they acknowledge that. They acknowledge the fact that the Tornado Cash devs built in a bunch of compliance tools, like being able to provide a proof of history if you needed to, and having KYC on the front end, and none of that matters to them. So basically, the precedent this creates in my mind, especially for a dev in Europe, is that if you deploy a smart contract on chain, you are basically liable for all potential future criminal activity that might happen on that smart contract for the rest of time, right? And the only thing they really need to prove based on this case is that you could have reasonably foreseen that there would be criminal activity. And so I don't know who the hell wants to deploy smart contracts in Europe knowing this, right? Because this isn't even a case where you can like do something. It's like if you've deployed it and people are using it criminally, you can't like undeploy it, right? So you're just kind of fucked.
But like this is like, let's say someone sells a gun.
Yeah,
and
exactly.
They use the gun to commit a crime. It's like,
or a smartphone, right? Like that. Yeah,
there's like so many examples where this doesn't, like, obviously I can understand where they're coming from. Like I understand the argument that they're making, but like there's so many, like you could apply this to so many, like any tool, like anything.
It just it undermines the whole criminal justice system and just shows how much bias can impact rulings and how things are viewed and what's reasonable, despite having like one set of norms applying in one area and then applying that same set of norms in another one ends up falling through, which it's
that was by far the worst part of the because let's face it, criminal activity is taking place on literally like every smart contract in some sense. Like if
also,
you just talk about the money flowing through and like what it's touched and everything, and the whole like you needed, basically you need to be able to foresee everybody who will ever use what you deploy for the rest of the time, which is like what you were saying, which is just impossible to kind of comply with that. So yeah, it was a pretty sad. It was a pretty sad ruling because of like the logic that they used.
Yeah, the precedent is pretty terrible. It's crazy that this is happening in Europe. Like, yeah, I think privacy tech and privacy has always had these, because you can always, for any like marginal increase in sort of surveillance technology, you can always argue that it'll make you safer, right? Like if you have cameras in everyone's houses, if you track everyone's computers, people will be safer. But like democracies have always protected the right to privacy. Like people have have the ability to like protect certain information and things that they do from the government. And I feel like recently with the AML laws, the KYC, like in Europe, you can't transfer. I think it's over 5K supposedly without like doing KYC on your counterparty. Like we're just eroding all of that, like eroding financial privacy completely.
Yeah, it's arguable though that it makes it safer. Like what is kind of sad about this is that the Netherlands are the ones that had the worst massacre of like Jews in the Holocaust because they required a fully public database that had like where everyone lived and like who was like Jewish or not, basically. And this is why they had the most deaths out of any country in Europe. So like the framing of privacy as a bad thing is just, it's just like what needs to be fixed.
Yeah,
because it's really not. And there's tons of times like you think the gay rights movement would have ever gained steam without people being able to like talk in private, right? There's a lot of things that people need to discuss in private to kind of like progress society in a sense. So
and definitely like with the COVID stuff, like there's a lot of this like trade-off of, you know, protection for like lack of freedom. At least in Canada, like it was really bad in terms of like lockdowns and vaccine mandates, and for like a very long time. Like, and even with like the truckers, which is like peaceful protests, you know, banning or closing people's bank accounts, like definitely a growing trend in the world.
It's rare that governments don't take advantage of a crisis to increase their reach and power.
Yeah. But that's like, I think a reason why a lot of people in crypto are, you know, it's a balancing act. Because like a huge way they actually enforce this is through the monetary system, right? Because that's how you really, like, when the rubber meets the road, if you can, you know, destroy someone's livelihood or like close their bank account, like people aren't fucking around when that's on the line. So an alternative money system where that can't happen is, you know, obviously threatening to their ultimate power.
So I said this is a really good tweet the other day from Jake Cherniffsky, that lawyer. He said 21st century democracies claiming to be a bulwark against authoritarianism are ravenous for powers that would make 20th century dictators salivate. And it's true, like it is just crazy how much in the last, basically since 9/11, I guess, the amount of authoritarian like powers governments have just continued to like seek.
And in Europe, it's kind of the worst. I mean, the US has much stronger like First Amendment protections and I think constitutional rights to privacy. And hopefully the case against the other Tornado Cash developer, which is in the US, will yield different results. But in Europe, it's just, you know, these sort of bureaucrats in Brussels that really believe like the regulation is the answer to everything. And it's getting pretty intense. Do we want to talk about the MEV-Boost exploit? I mean, I'm curious how we can actually help, like with this appeal or something like that. I don't know if there's I pinged them in to see if there's some way that people can get involved. If so, we'll post it maybe alongside the episode. But it seems pretty important for crypto and for freedom generally. But yeah, if we want to talk about the MEV-Boost exploit, that was like really impressive. Yeah, I think someone tweeted that the SDNY understands crypto better than most VCs from this enforcement action, and yeah, I kind of agree. It was it was really impressive. Cedric, you want to give maybe the lowdown on the exploit and yeah, why it matters?
Yeah, so basically, I think it was two brothers. One of them was a Polychain intern before, low carb crusader. And what they did was the way MEV-Boost works, the sidecar piece that like searchers, like builders and validators will run. And basically how it works is like a builder builds a block with a bunch of transactions and then sends it to a validator, and like the highest bid is the one that they kind of take, and then they propose that block. But when you send this block, a validator could unbundle this block that you've sent them as the builder and then insert their own transactions. Okay. And so the way they kind of get around this is that you have to like sign, you have to get like a signature or something committing to that block before you see the contents of it. So you can't like unbundle it. And these guys figured out a way to like forge that signature. And so what they did was, when they got this block, they like did this fake signature that basically guaranteed they wouldn't unbundle it. And then they got it, and then they inserted their own transactions into it, which like sandwiched. So the builder put like their own sandwich transaction in it, and then they put their own to like sandwich the builder, because the builder would have put like, the way sandwich transactions work is you'll like buy like 20 mil of something and then sell like 20 mil and 100K of something, okay, to make like 100K profit. And so it's big numbers, but it's to make like kind of a small profit. But when you're the builder, it's kind of riskless in a sense, because it's pretty easy to just extract that sandwich profit. So essentially these guys, by forging the signature, were able to take like 25 mil with this sandwich attack. So it is different from like normal sandwich attacks that happen. So like when this happened, a lot of people felt no sympathy for the MEV bots that got exploited, because they're just sandwiching users all the time, right? And there's a really good tweet from Doug from Ambient, and he said, the closest analogy I could come up with this is like the Baltimore police deciding to go after Omar, and only Omar, from like The Wire. So if you remember The Wire, Omar was this like criminal, but he only went after other criminals. He didn't go after like ordinary people. He only stole from like the drug dealers and the other crime ring. And so basically it'd be like them arresting Omar, but then leaving everyone else kind of like free. And that was his analogy, which is like kind of, it's like the closest one you can kind of get, I guess. But yeah, like the DOJ understands this. It also seems likely that the DOJ didn't just alert authorities of this. I mean, the DOJ didn't just come onto this their own. Someone who got stolen from here, or someone a part of the MEV like supply chain, went to them. And so there's a lot of people just like in this industry that are constantly going to law enforcement now to like fix their problems, which is not ideal in my opinion.
But do we think that this will end up making like sandwiching illegal, or like,
I mean, sandwiching is like,
you could just do it from like a non-extradition country or something, and just like, you know.
But I think this was a specific case though, where there was like pretty clear like fraud.
So the signature is considered
false signature.
Okay.
The signature is considered the fraud.
That makes sense.
But also the DOJ is like enshrining MEV-Boost here. In the indictment, they talk about how it's relied upon to make the Ethereum network function. And like Ethereum, MEV-Boost is this third-party software developed by a private company, right? That people in the Ethereum protocol use, but it's not like enshrined in the protocol or anything. And the DOJ is essentially enshrining it with this statement. So yeah, I don't know. But to your point about sandwiching and front running, yeah, I have a tweet about this from a year and a half ago, which is kind of tongue in cheek, but it was like the most likely way that this is solved is out of protocol, and by out of protocol I mean jail. And like, I don't know how.
From like, the North Korea is just going to spin up an MEV bot and do it.
I know, that's the thing, right? It's like,
I don't think you can make that conclusion from this though.
No,
like,
not from this,
yeah.
Because this is different than just a normal sandwich. This is you're intentionally baiting someone, right, to steal. Like, you're trying to get an MEV bot to do this big sandwich attack with a lot of money. But I don't know. They obviously understand how this works. Like when it came out, I didn't know like the number right away, 25 mil. I remember that number from when this happened. And I was like, no way, is this like the MEV-Boost exploit? And then like I started reading it, and yeah, sure enough, it was. So I remember when it happened, people were like cheering, like normal users were like, good, like fuck the MEV bots. Why should we have sympathy for them, right? Because they get sandwiched all the time by these MEV bots. But obviously, the powers that be decided that I
I
don't know.
agree
It,
that
like yeah,
Yeah, I agree that yeah, this is different than your standard sandwiching, but I think it would be optimistic to assume that the current regime would stop their persecution at this and not continue reaching
But it's like, how is it
further
different than
and
like
lighter
payment for
infringements.
order flow or any of that other stuff? Right. Well, I guess like the difference is because you're consenting to a certain amount of slippage when the user makes the swap. Same thing with the payment for order flow. Like you're consenting, like that you're giving them, or like some sort of fee you're consenting to. Whereas the fraud of the signature is like, that's
no,
like,
but even in like payment for order flow, there's still laws around like best price execution and everything, which doesn't hold up in the slippage setting.
yeah. But I'm just trying to think like, it's harder to go after a sandwicher when it's like, okay, like the user accepted they're willing to take up to this amount of slippage and we just gave that to them, kind of, right? Like if you set your slippage tolerance to nothing, or you use like a private RPC, like you won't get sandwiched.
Yeah, I mean, you use a private RPC though, you're just now adding another like party that you're trusting. You're trusting one party, right? But you're still trusting someone. So I don't know, like
I just think it's a bit of a leap to go from them faking the signature to.
Yeah, I agree. I think we all agree on that.
yeah, we can talk SocialFi. Like I don't use any of these things because I don't really want people trading my likeness. But but I do understand why people use them, right? Like I think it's good to see experimentation in this kind of like weird social stuff, other than just DeFi. I think it's good that we're kind of progressing into a bit of a different domain here.
Yeah.
So
I think the SocialFi stuff is pretty cool. I mean, I guess it was worth distinguishing what specifically. So Fantasy Tops is yeah, I like the fact that we're branching out of DeFi, right? Where I think it's just important for the growth of the space as a whole, and in terms of onboarding new users and interesting ways to participate in the ecosystem. But so and you have like the financialization of everything, right? That's what crypto enables via tokenization, which makes previously potentially uninteresting games much more interesting. But it also creates reasons for people to start trying to game everything when there are financial benefits. And so I think what you're seeing now on Fantasy Tops is people trying to bot accounts to inflate engagement and users, and it's tough when this game when this game is based on an ecosystem that it doesn't really have any control over, being Twitter, to keep this game kind of honest, because there's no way to really control for that element.
Yeah, I'm kind of surprised that like Friend seems at 135 mil. I guess like it obviously had that explosion. I think that was near one of our first episodes like we ever recorded in the summer, which is crazy. It's almost been a year since we started this. Does not feel like that. But it was like last summer we did an episode when Friend Tech was exploding. I remember talking to you guys about that. But now like the airdrop is over, it'll be really interesting to see if people still use it, or like more groups get created. I think like a lot of people like created groups back then and then kind of like slowly fell off. Like but they also felt like a weird obligation that like people bought their keys that were like expensive, so like a weird obligation to like keep posting, but then like a lot of people fell off. It seems like in the new update, Jose, you probably know more than me, but like there's different pricing models, there's like bigger groups, like which I think address a lot of the issues initially, because it just got so expensive for like the common person to join a group, and now it seems like they've made like custom price curves, so it can be more of like a bigger group. But it'll be interesting to see if activity like continues on that now that the airdrop's over. Obviously, the kind of attention has shifted to Fantasy Top because there's a potential airdrop there. But
yeah, I guess I'd split them into like crypto socials. There's maybe Lens, Farcaster, Friendtech, and now Fantasy Top, right? And I'd say like Lens and Farcaster are a little bit more. Maybe this is unfair, but a little bit more skeuomorphic, and they look more like the traditional social media. But like, you know, you have this. I mean, I think Farcaster is really cool, decentralized social graph, and you have the frames you can build on top of and stuff. But I do think there's something interesting about both Friendtech and Fantasy Top in that they tap into this speculative crypto element, which I think is, for better or for worse, going to be like a necessity to have a crypto app really succeed. The Friendtech, like I'm long friend, so you know, to take everything with it with a grain of salt.
Disclosure.
Yeah,
I've never used the app though.
I used it. I think it's pretty underwhelming. Like they had over 6 months. They generated like 50 million in fees and had all of, you know, crypto Twitter's attention to build the V2, and they basically shipped like these groups, a token, and a forked like in-app AMM, like to some extent, you know. Like the backend went down on launch. There's like all sorts of kind of issues. I think they haven't grown the team very fast. So I think they have like something really special with like, I bought like a lot of the blue chip keys on launch, and most of those people are still active, like responding, right? They feel like some obligation to respond, and they also leak alpha in a way that they don't on Twitter. Like I think Hisaka first announced his like ENA position to his Friendtech followers, right? And some of the other people whose keys I bought are also like, they get asked pretty pointed, specific investment questions, and they're answering them. So there's clearly like something happening there. I don't know if this is the team to capitalize on that, but I think they have enough of a movement behind them where and like just I feel like the Friendtech Twitter is just like goated in terms of
they have a good Twitter.
Yeah, just like so
keeping those like main, I don't know, you want to call them KOLs, but like keeping those main people engaged is obviously very important.
Most of them dump though, right? Like it was bizarre seeing all these people dump like four figures, like on some of them like 4 or 5 figures on chain, like rushing to dump. Like it's been a
lot of LARPs.
Yeah, a lot of that.
It'll be like, I really want to see with especially like the bigger groups and the cheaper pricing, like some non-crypto people make a group.
Right? I think Grayson Allen has like made one. I think I saw that.
He's pretty crypto. He's been in crypto for a while though.
Yeah, like that was.
It's hard to rationalize non-crypto users participating though. Whereas, right, because like what's the benefit versus just making a group chat if you're non-crypto kind of thing.
Yeah, that's a good point. But
like, yeah. So that's why I struggle like with the Friendtech stuff where it looks too much like existing.
But I feel like the infrastructure could be cool, like versus a group chat. You know what I mean? Like a group chat, you gotta like manually add and remove. They're paying like subscriptions over time. It could be like a one-time fee. It'd kick you out if you sell your thing. Like you're automatically in there. But yeah, I'm sure there's solutions for that in Web 2. But it's just like that would make me excited. It'll be interesting to see what happens after the Fantasy Top like airdrop's over. If like attention shifts back to Friendtech or if it goes to something new.
It just depends on where there's money to be made, right? Like the reason Friendtech was, Friendtech, you had both the first order way, which was, you know, buying and selling keys, and then the longer term airdrop that people were, you know, engaging for. Whereas with Fantasy Top, I think, you know, there's less people playing right now for the airdrop, but more because there's, I think, you know, more alpha to be had and more edge to be made if you're really in the weeds and trying to figure out, you know, who's who's cheap, and you're playing with these packs. And I think there's a lot more to do on Fantasy Top, and which kind of adds to the argument that I think it's going to be hard for crypto socials that look too similar to their like Web 2 counterpart.
Yeah. Yeah.
That's it. Yeah.
Points for engagement though, right? Which is maybe not the best. I've also had like 5 people steal something that I made because they think they're trying to get engagement, or that they like get fantasy points and stuff. No, I don't know. It's weird incentives, because also whenever you pay for engagement, which I guess Twitter does too, right? It's just you don't get the best like most truthful, honest content when you're paying for engagement.
Yeah.
Because like I mean, like if I wanted to, it's pretty easy to like know the formula of how to get like a lot of impressions and a lot of people liking and like retweeting your stuff, right? But it's just dumb. It's just like dumb fluff and bullshit most of the time, right? So that's the problem with like the model.
Yeah. All right. Want to do FTX quickly before we wrap up, or altcoin corner? We kind of sprinkled in an altcoin corner in the middle. What do you guys think?
Yeah, I think the sprinkling is, unless there's a lot of stuff we haven't covered on the altcoin side, a better way to kind of go about it.
What do you think, Gem Hunter?
Just talk FTX.
I
Right.
think about banana and not coin. So those
All right.
Jan,
Well, FTX.
Trump?
FTX.
Yeah, Trump's good.
And Jose showed friend. And what else? You showed something else.
Yeah, Setters, when are you going to show something?
I said I own the
his
friend
top.
too.
Oh, you own friend too. That's two. That's John.
And what do you own? Anything else that was mentioned?
Yeah, I own Vanguard.
He's 100% in friend.
All right. So FTX announced their creditor plan. The TLDR of that is basically that if you had less than 50K, you're going to get 118% back within 60 days of the plan being confirmed, which I've seen some estimates. It's like Q1 2025. And this is about 96% of customers. And then if you have more than that, it's I had it written somewhere. I can't find it now, but it's slightly more basically. And the TLDR is the government claims, like if you guys remember, the DOJ and the SEC all piled in once FTX went bankrupt with like ridiculous claims of what they wanted and like tax that was unpaid and stuff. Those got subordinated to everyone else, which is exactly as it should be. And preferred equity and FTT both got 0.
Darn.
Hilariously, FTT pumped super hard off the news. It was like on the 8th of May, it's like a bunch of people got, I don't know, it was really funny.
Clarity pump.
Man, it's still on it's still on Binance. What the hell?
It's still like, I think it's 400 million or something market cap. Let me check. No, it's 540 million market cap.
When FTT has outperformed most of crypto traders.
And yeah, it was on the 8th of May, it was announced, and then it like pumped like 40% or something, or 30% that day.
But I mean, let's talk about like, is this going to be a big stimulus when people get these? Because I think
but it's so far away.
There's a lot of people that sold their claims at like 10, 20, 30 cents to non-crypto, like, these people that just buy claims as like a trade. And then for a lot of them, like if you sold your claim at like 10, 20 cents and then you just like bought SOL, then
how many people did that?
I mean, FTX like had a lot of SOL people on it, right?
Yeah.
So, but my point is like, it's probably not as big of a stimulus as people are expecting, because a lot of that is going to go to these people who are just buying claims, right? And they're not going to like deploy into the market.
Yeah, I think you had you had some selling, like you had some real panic selling in the like sub 30 cents price range, like 10, 20, 30. that was basically like immediately. That's probably funds where LPs needed like, yeah, we're just like get us anything back, and had to do that. Because it's really hard to rationalize selling at that value, right? Like at that point, you might as well. I feel like it just makes sense to hold out for some clarity, because what is 10 cents on the dollar really going to offer you? And then I think you had a decent amount of selling in the 40s and 50s for sure, where this was actually like a meaningful amount, and you can, if you think the markets are going to heat up, the opportunity cost is massive. And so I do think you had a decent amount of selling because of opportunity cost. That whole 96% thing, right? That's of customers, but not of money, right? And that's what really matters. Like 96% times a bunch of small accounts is a meaningless amount of money. Whereas it's like it really boils down to the larger peeps and kind of what they're doing. That being said, I do think there was a decent amount of selling, and it'll kind of continue dripping around, right? It's just funds that are basically, because now it's selling at like 90 cents.
Yeah,
And it's
like,
okay,
why
if I
wouldn't
need
you
to
sell
hold
it?
for 7 months, because it's basically like arbing, not arbing because there's different levels of risk, but it's just like distressed funds that are where their mandate is to return, low teens % or something like that on an annualized basis, and this is part of what they do. So I think you'll still continue seeing that. There's definitely going to be some distros whenever, some kind of stimulus whenever that happens, but I think it's been kind of sprinkled throughout rather than being this one lumpy stim middle of next year.
If like if you are eventually going to put this money back into crypto, and you're not going to get it for 7 months, like, and there's pretty clear clarity that it's going to be what's going to be returned, it's like, why wouldn't you sell it now? It's like, if you're bullish on crypto, you're going to put it in, you probably think stuff's going to go up more than 10%.
I mean, as a claim holder, it's just like annoying to go through the process, honestly. Like, it's just, yeah, I haven't really, I looked into it a while ago, and it seemed really annoying to go through. Maybe now it's easier, but I think it's like my claim's decent, like size, and still I'm not really incentivized to go look into it, because so I assume there's a lot of lazy people in the same boat. I don't know.
There's lazy, and then I have an unfortunately large claim, but there's also not all claims are treated equally, and it's a very PvP environment because there's a finite amount of money, and so every dollar that they can hold for you for various reasons, they will attempt to. And so I think you had one useful, I think, point would be to see, what percentage of claims are in a clean standing, and it's all public, so you can kind of do the math on the claim size and what standing it's in. And if it's in good standing, you can probably assume with some high level of confidence that it was sold. And then it's the ones that have weird quirks and other things that are going to be pretty big hurdles on the selling process. And speaking, personally to that I think those are where most of the stimmy can potentially be. So if somebody wants to go and do some of that math, or you just scrape all of these PDFs, you can probably get a good estimate of how much has been sold.
Yeah, that would be interesting for sure. And then also worth noting, the lawyers got paid $1.5 billion, which is, to me, just insane. Yeah. I mean, I've tried to think about it a bit, like what they could be doing. Yeah, I don't know. I've had, unfortunately, through the years in crypto, dealt with, and we have at Delphi, like, spent a good amount of money on lawyers. And to me, I have to say, it's the most broken industry I've ever interacted with. Like, you literally have, you just get sent like how many hours they spent on things. You're paying, like, for the top law firms, like thousands of dollars an hour. You have like zero transparency. You're often like paying them to basically to teach them about crypto, like to explain like very basic concepts to them. They're billing you for all of that. They're billing you for time spent reading emails, like by the minute. and they just like have no incentive really. Like this model of getting paid per hour creates like the reverse incentive for efficiency, right? You just end up paying out absurd amounts for things that aren't clear up front. And I've also been just like really unimpressed with their work, honestly, like the quality of their work. Like even in some of these defenses, like I don't know we never talked about it, but I thought the TFL case, maybe we should speak about it at some point. Like I thought the defense was pretty terrible there. I thought the SBF defense wasn't super great either. And yeah, these people are making, like in this case, in the case of the FTX bankruptcy, like $1.5 billion for what seems like basically an like administrative job, right? You're just finding all the assets and selling them. Like, how is this?
And they did a horrible job at that too, by the way.
Yeah. Like
there's some of the amount of money that was lost on some of these sales too, timing is one thing, right? Like everyone has poor timing sometimes, and it's so much easier to judge that in hindsight. But others that were there's a rush sale at a discount just to get it out the door when there was no other sense of urgency for anything else made no sense, right? Like, why are we urgent on something that needs that, like, you can actually extract more if you're patient with, and then very slow on kind of the other sides. Like if you do the math on how much was spent per hour through the life of this thing is just egregious. Like there's no way to rationalize even a 10.
Yeah, so once you calculate like how long it's been and do it per hour, the 1.5 billion. Well, it's been like a year.
And this is where this is where I'm way more bullish decentralized governance than most people, because you realize that like governance in general is just hard, and like the thing with decentralized governance is you see it, and so you see all the chaos. But like with this stuff, and it's like these guys were getting liquidated on Aave, right? Like that's the part we could see, like the tip of the iceberg that we could see. I imagine the hours and hours of waste that were spent in the background with this. And I honestly think a decentralized governance process would have done a better job, like picking, like handling this. Even when you see, like, especially the mature communities like Maker and Aave, I don't know, like the governance is really hard. And when you see this kind of stuff, when you see Congress discuss things and like all the lemmings there, it just, I do think there's room for a better system here. It would be interesting to see like what would happen because we haven't really had a DeFi protocol with significant bad debt where you really have to decide, because at that point, like, it's the governance token holders have control, right? Have governance control. Like in the case of Aave or something, they'd be like pretty significantly diluted to make depositors whole. And it would be interesting to see whether they would act in the benefit of the protocol or in their own benefit. But
probably their own benefit.
Well, I mean, what's the token going to be worth if they don't do it?
It depends on the size of the hoe, I guess.
I don't know. Why would you ever use Aave again if they voted against your interest as a depositor?
It could theoretically be done programmatically, right? Like there's some oracle that identifies whether there's been bad debt, and then governance control just shifts to like the A token holders, like, and now all the depositors are locked and they have governance power proportional to their holdings, and they vote for who they want to distribute these. I don't know. I feel like there's a lot of inefficiency in these bankruptcy processes and with legal industry generally.
Yeah, so I just did the math. It's 550 days since the FTX bankruptcy, so that's 2.7 million a day in lawyer fees if it's 1.5 billion.
It's the power of passive income.
Over 100K an hour.
Yeah, it's a lot.
Wow,
I would have done it for way cheaper.
All right, let's.
Thanks, Duncan.
Well, they had to learn how to use like MetaMask. That's like a couple million, right?
They also just got like hacked and stuff too. It was ridiculous. Hacked, liquidated everything.
There's definitely 7 figures paid for people spending hours learning to use MetaMask. Like,
yeah,
there's probably 8
more. What else is there to do?
Yeah,
2.7 million a day.
Yeah,
it definitely took them a couple weeks.
It's fucking wild. Looking for liquidation, bankruptcy services, altcoin Gem Hunter is branching out.
He's studying for his bar.
All right, guys. I think I think let's wrap it there. Thanks very much. I think it was a good episode. See you again in 2 weeks.
Bye.
See ya.
See ya.
Nothing said on the Hive Mind is a recommendation to buy or sell securities or tokens. This podcast is strictly for informational purposes only, and any views expressed by anyone on the show are solely our own opinions, not financial advice.